Hello, welcome back to Learn Economia. In this video, we are going to discuss yet another important topic in the arena of financial economics. So, we would be discussing several things about investment in mutual fund. So, almost all the aspects of investment in mutual funds would be discussed here. So, let's get started. To start with, what is a mutual fund? First of all, we have to understand that a mutual fund is a financial vehicle that would be helping you to pool your assets from shareholders to invest in securities like stocks, bonds, money market instruments, and other assets. So, actually, a mutual fund involves a collection of assets, so you can choose these assets as per your wish. So mutual fund is actually a way to diversify your portfolio. If you go for mutual fund, it's a kind of risk aversion kind of technique, or that means that you are reducing your risk. So I have already done several videos with respect to investment. I have done videos on investment strategies. I have done video on the pros and cons of different investment strategy. I have done video on who to do what kind of investment, and also video on what to do after choosing your investment strategy. So before making your initial investment, what is the step you have to take? All these the links of all these videos would be given in the description box, so that you can go through those things and see how you can make investments in the financial market. Coming back to the case of mutual fund, we can see that this particular uh, aspect, or this particular kind of investment is operated by professional money managers who would be allocating your fund in different assets, and this is mainly to make the chance of getting gains more, so that you will be, I mean, if you are a risk averse person, mutual fund is one of the best strategies that you can choose. This would help you to reduce your risk. So a mutual funds portfolio is actually structured as well as maintained in order to match the investment objectives, which is already stated in its prospectus. So different mutual fund companies would be having different kinds of assets in its portfolio. Mutual funds are something which would be giving you small or individual investors access to professionally managed portfolios like equities, bonds, other securities, etc. So here what happens is that each shareholder participates proportionately in gains as well as losses, because you will be having a set of different assets in your portfolio. If some of the assets are helping you to gain, there are chances that some of the assets would lead you to losses. So you won't be suffering from loss everywhere, and also you won't be getting gains everywhere. So this is a main this is the main criteria with respect to what is known as mutual fund. And mutual fund invests in a vast number of securities. As I have already told you, your portfolio would be diversified if you are going for mutual fund, and a performance here is something which is usually tracked as a change in the total market cap of the fund, and this is derived by the aggregate performance of the underlying investments. So most of the mutual funds are part of larger investment companies, and this would include a wide range of companies, and it would depend upon which mutual fund are you choosing. A mutual fund has a fund manager who is also known as an investment advisor, because this person is actually legally obliged to work in the best interest of mutual fund shareholders. So if you are investing in a mutual fund, your investment strategies, everything is decided by the investment advisor. So this person would be giving you a lot of advices. So following these advices, you would be making your portfolio decision as well as you will be making your investment decisions. So how are mutual fund priced? So this is also very important if you are going for mutual fund. The value of mutual fund actually depends on the performance of securities in which it invests. So how much share of each security has in your portfolio? I mean, for example, if you have assets like equities, if you have assets like bonds, shares, etc. in your portfolio, then you have to see how the share is going, what is the price of equity with respect to your portfolio selection. And when buying a unit or share of a mutual fund, an investor would be buying the performance of its portfolio. So we can see that it all depends upon the portfolio's value, and investing in a share of mutual fund, it is actually different from investing in shares of stock, because as I have already told you, mutual fund is entirely different from stock market, because mutual fund consists of a collection of different assets, and this is one of the way to diversify your portfolio, and also this will help you to reduce risk. Unlike stock, mutual fund shares do not give their holders any voting rights, and this is very important with respect to the difference between stock as well as mutual fund, stock and mutual fund. Okay, and a share of a mutual fund would represent investment in different stocks or other securities, and the price of mutual fund is known as net asset value or NAV, and this is calculated per share, and this is also expressed in term this is also expressed as NAVPS. Okay, so a fund's NAV or net asset value, it is something derived as by dividing the total value of securities in your portfolio by the total amount of shares outstanding. So what do you mean by outstanding shares? These are those held by shareholders, companies, or etc. And these fund shares can be purchased, or it could be redeemed at fund's current net asset value. And this is something which does not fluctuate during market hours, but this is settled at the end of every trading day. And the price of mutual fund, it is something which is updated when the NAVPS is settled. An average mutual fund holds different securities, and if you are going for a Google stock, then you can see that it is something which relies on the success of the company's earnings, because all your dollars are tied to one company. Gains and losses are dependent upon the company's success. So that is what uh, share do, because if you're going for a share of a particular company, if you're buying a single company share with your entire amount, then whether you're getting loss or whether you're getting gains, it all depends upon how the company is moving in the financial market. But if you are going for mutual funds, as I have already told you, even if you are facing loss from certain financial assets, then the chances are high that you would be getting gains as well from some other kinds of assets. So you can, to an extent, compensate your loss with gains. We can also say that a mutual fund may hold Google in its portfolio, where the gains and losses of just one stock are offset by gains and losses of other companies. So that's what I have already told you. If you have different assets in your portfolio, gains of some assets would be compensated by loss, and loss of some assets would be compensated by gains. Now, again, how are returns calculated for mutual funds? Is a very important question. When an investor buys a stock, for example, if he is buying Apple stock, then this person is buying partial ownership, or the person is actually buying a share of Apple company. If you're going for mutual fund, or if you are a mutual fund investor, then you are buying partial ownership of mutual fund and the assets which are included in your portfolio. Investors would earn a return from mutual fund, especially in three different ways, and this can be on an annual basis, or this can be on a quarterly basis. So what are these three different ways? Income earned from dividends on stocks can be one, and funds often give investors what is known as a choice, either to receive a check for distributions, and also if fund sells securities that have increased in price, then the fund realizes a capital gain as well. So when the fund's shares increase in price, then you can say that you can sell your mutual fund shares, and this would be giving you a profit. When researching the returns for a mutual fund, an investor would see that total return can either go up or it could also go down, and this would include any interest, dividends, capital gains, etc., etc., etc. In most of the cases, we can see that total returns are calculated for 1, 5 and 10-year periods. This is what is usually done with respect to mutual fund. And coming to types of mutual fund, we can see that there have been different types of mutual fund which are available for investment, and this would include your stock funds, money market funds, bond funds, target date funds, etc. And another question is asked here: are mutual funds a safe investment? As I have already told you, compared to shares of a particular company, compared to stocks, compared to bonds, mutual fund is one of the best investment strategy if you are a risk averse person. All investment would include some kind of risk when purchasing securities, but in the case of mutual funds, since you are actually owning a collection of securities, it is actually something that will help you to reduce your risk. Unlike deposit at FDIC, insured banks, and NCUA, insured credit unions, the money invested in securities typically is not federally insured. So this too you have to be very clear about. And next question, can mutual fund shares be sold at any time? So this is a very important question, because you will have to see can you sell your mutual fund or the assets in your mutual fund anytime as per your need. We have to understand that mutual funds are considered to be very liquid assets, and shares can be sold anytime. And but this would depend upon the fund's policies regarding exchange fees, redemption fees, etc. So there may also be tax implications for capital gains, which are ensured with mutual fund redemption. Again, next question: what is the target date for mutual fund? When investing in some retirement savings account or some target date funds or some life cycle bonds, these are considered to be some popular options for people who are going for investments. But choosing a fund that is dated around retirement, the fund would promise to rebalance and shift the risk profile of its investment. So this is something which is very much common to a conservative approach as funds approaches the target date. Now, I hope you could get some idea with respect to mutual funds, investment in mutual funds, etc. So, and also many of your concerns might have answered here. So, I request you to like, share and subscribe this channel for more videos, and you can be a part of my Telegram channel and Telegram group to discuss your doubts regarding economics. So, also if you want me to do any of the videos with respect to any of the topics that you want me to discuss, you can comment that in the comment box. So I'll be taking it up from there. I'll be picking it up. That's it for today. Thank you for watching.